before we do these roundtables, we sort of, I want to talk about this or talk about that. But when we were talking earlier, it's just a theme that for today, I think would be good, this concept of buying and selling and where you sell, because again, we have a variety of types of listeners here, institutions, RIAs, and individuals who are trying to figure out what to do. And I think everybody still struggles with the concept of when to sell. And when you've had these big run-ups, it's really an issue. I'm intrigued with it personally. That's why I'm asking it, of what to do. And when I hear David Maris talking about owning something since 2013, it's gone up and down. He trims, he takes, but he still holds it and he still likes it. Really old school. I hear, Larry talking about buying something that other people are saying no mas because they owned it since 2013, a very different company. We have people who just stay in things. Marcin has a too cheap to be true mantra when he buys things, and he's quick to sell if there's a disappointment, but yet he'll own some things like Energy Transfer for a long period of time. So I want to just open it up to the crowd, and I know whoever comes in first is great. So how do you view this? I mean, am I asking, so especially with the market where it is today, where we know there may be some dislocation at some point in the future, near future, perhaps, possibly.
I think one thing I do that you probably know about is, when things run up, I look at the technicals a lot. And what I do a lot is I'll write covered calls, out of the money covered calls on a portion of my position. And, if the stock continues to go up, then I'll just roll those forward or see what I do at that point. But I do a lot of that just when I think things have gotten ahead of themselves. And I only write them out 2 or 3 months. So it's very
interesting because you're talking about, so you talk a lot about covered calls, but you also talk about technicals. So I'm curious here, the role technicals play in your sell decisions, or do some of you just not even, look at charts and overlay them with things and stick with the fundamentals? Curious. David?
Well, so I look at the technicals. I'm not very good at that. I like to keep a little book that has why I bought something, and you really document your trades. This was something that somebody had taught me to do early in my investing career. And some are trades, some are investments. And you shouldn't confuse the two. If you're playing a quarter and the quarter goes well and the stock pops, and then it's very easy to fall into this idea, convince yourself, well, that's why I own this, and this is a good investment. And then you stick around and then it fades. You just have to decide, do you want to be in this for a few years? Or like Larry said, I generally like to think 18 to 24 months out of like, hey, can I look forward and say, this is a really good investment? If it's not, then there's nothing wrong with saying, I'm going to trade this. But you just have to be aware, are you good at that? And if you are, that's pretty rare. But if you're going to trade, then taking profits early is really important. Don't confuse the two things. So something I owned for 2011, you have to say, well, I'm here to see, is there an inflection? Has the business changed, or is it just bad news? But I can go on and on about how bad I am at selling. So,
well, you and probably everybody. Larry, what were you going to say?
I love what you just said, because I think it's really important to acknowledge why you got into a position, whether it was a trade or an investment. And even if you're good or not at it, at least acknowledging what the impetus was. I'll give you a recent example that I did, which was First Quantum, a copper company that lost a license in Panama. I bought it on the blow up, and it started moving up. And then I kind of said to myself, you know what? This is not your expertise. You don't know anything about Panamanian politics. This is not, and so I was like, sure, maybe this could be a good investment, but that's not really what this is. This is a play on Panamanian politics, and I got out. I regret it. I missed out on a lot of profits, but you know what? I don't regret it because it wasn't my sandbox at the end of the day. So I think acknowledging that, and historically what I would do for a core position is I do actually model out my companies in great detail, and I'll have a target price. And if it hits a target price in 6 months, I'm out. And if it hits them in a year, I'm out. And if the thesis changes, maybe I'm out. It's just acknowledging why you're there.
Okay. And Mr. Marcin?
Simple concept, Herb. You can't have a predisposal to selling when you buy something. To me, it's kind of
Well,
foolish.
wait, that actually, I would argue the point that some people have disciplines, and some people say, and again, there's no right or wrong way to invest, and
I
some
have a
people have
discipline. I'm going to share the discipline. You once said to me, I bought this stock, and if it drops, I'm going to buy a little more. And I said, that's part of your problem, because you don't know if you want to buy a stock. It's a dynamic, every holding is a dynamic position. So there's going to be news flow. There's going to be earnings. There's going to be new product launches. There's going to be competitive dynamics that are going to change. So all I'm saying is I have a very simple philosophy. I buy a stock when it's down a lot and too cheap to be true. And sometimes the news is good and I buy more up. Other times I get like Inspire. I got a 4X despite 2 quarterly misses. I sold 80% of my stock and I've lost 2/3 of it since I sold my highest stock.
should have
So
listened to David Maris.
yes, everything. A stock could go down 10% on bad news, and you might want to buy more. But if it's atrocious news, you might want to turn around, sell it, and short it. So you can't have a predisposed notion of just selling more because they go up a little or they go up a lot, or selling more because they went down a little or down a lot. It all depends upon fundamental conditions at that point and a new valuation.
All right. Look, I talk about the art of investing, the sport of trading. And when I was on CNBC 2 nights ago talking about the meme stocks, I said that the meme stocks were gambling on the sport of trading. And we can see how that's gone, at least as of whenever. Anyway, guys, this is a fantastic discussion. Thank you so much. I want to remind everybody that if you missed what some of the topics were today and you want a little more detail, be looking out for the roundtable recap, the recap if you're in the roundtable, or the more extended recap if you're in the exchange. It'll be in your email box at some point today if you're watching this early, or it is already there and you maybe missed it. Anyway, always open it up. It comes from Wall Street Beats. That's it for today. Thanks for joining us on the Beats Roundtable. I am Herb Greenberg. See you tomorrow.